or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, Chris, and welcome back to the show. Real quick, before we talk about the option stuff, let's just react to this consumer confidence number that is coming out here momentarily. How you doing, Chris, by the way?
Good. I'm just getting a couple trades in, so just if you give me like 30 seconds, take the show. I'm getting a couple trades on the SPY. Okay, thanks.
So consumer confidence just came in a little lighter than anticipated. We've got a reading here of 97 compared to the forecast at 104. So consumer confidence coming in a little bit light here. Let's take a look at how that might impact the market. So far, not a huge reaction. NASDAQ, if you take a look at the 5-minute chart, you're getting a slight blip, but really not a huge dramatic move in either direction as of yet. I mean, this is a 5-minute chart, so really no reaction whatsoever. Russell down 0.8% on the day. The Dow is down 0.6. The Nasdaq's down 0.25%, and the S&P is about just the same. Overall, you take a look at other areas of the market. You got the dollar index continuing to push higher here this morning. Found a little support around the 105.6 level, let's call it. And if you take a look at gold and silver, both down on the day. We got gold down over 1%, silver down over 1.8%. So pretty stark movements there on the metal side. Oil also back down near to that 81 level that we talked about, guys. So we're seeing a bit of a pullback here to that 81. I mentioned this earlier. If you're watching oil, I think the upward trend is intact unless you see a failure at 81. So if we hit like 80, I'd say, yeah, we probably broke that upward trend here, at least for the short term. So we'll keep an eye on that. Chris, I was mentioning earlier that for people who are looking to get into options but don't have large capital bases, I believe if you want to do, where you don't get assigned, you do a put credit spread, right? So you collect a credit if the market goes sideways, slightly down, or up. Is that right?
You can still get assigned on credit spreads, but here, if you like, we can just walk through a quick example. Credit spreads are great for the smaller accounts. I can give an example. What's the stock you're looking at, Nick, so we can use one, and I can show you what the buying power would be and a reduction in your account. I can show you what the risk reward looks like, and also talk about the potential assignments. PayPal? Okay, perfect.
PayPal just for fun.
All right, cool. Let me share my screen here so Chandler can pop that in if he needs to. And I'll type some notes up. So share screen. We'll go PayPal, trading at 68.23. Okay. So let's talk PayPal. And let's say that you like the stock and you want to take a trade on PayPal now. And rather than, Nick, if you were to do a put, you'd probably do like maybe a $65 put or $62 put. And you're putting those cash secured puts at levels where you're like, look, if I own it there, I'm happy to take the assignment. That's a price I'd be comfortable with, and it's going to take the capital. If you did 100 shares of PayPal, you're going to tie up around $6,500 at a $65 strike. So a way to do that, here's what makes it. I'll do this with a cash account, so this will not be with margin. And that way it's just true value. So if I did, let's go to this account right here and go to PayPal. And if I did, let's say I want to see PayPal, if I wanted to buy it, we just had earnings on it. If I want to buy PayPal, let's say at $60, let's see if I can get any premium for a $60 strike. So if I go out like 30 to 45 days is typically a nice little sweet spot. There's 38 days or 52 days. I'll take the 52 and that should allow me to get some premium. So if I went $60, I could get 56 cents for it per contract. So if I did 100 shares or one contract, I'd get $56 of income, and price would have to fall below $60, which is, falling $8 and change, which is over 10%, right? And that's not bad. Like, you're giving yourself a big discount. You're getting paid if nothing happens, if you don't get assigned. But the buying power would be a reduction of that $60 strike is going to be $6,000 in buying power. And the reason it doesn't say $6,000 from a max loss is because I'm still collecting that 54 to 55 cents. But
Yep.
I'm tying up all that buying power to put in that cash secured put. So
Yep.
to make this cost effective, this is out of the money. But if I did a 60 by 57.50, now it's a $2.50 spread. I can still collect 25 cents of income. It's only going to tie up now $226. So I went from tying up $6,000 to $226. And Nick, on your cash secured put, if you did that, you're making 56 cents on a credit spread. I'm still making 24 cents.
Right.
So I'm
Right.
making about half the profit with, a tenth of the buying power reduction.
Yep. Yep. Exactly. Thanks for breaking that down. I always get the names mixed up. Frank's like, I'm doing a butterfly thing, and I'm like, Frank, you gotta like draw it on the board for me because I
Yep.
get
Did you guys
it
still
all
leave that
mixed
on the
up.
board when I was there? You still have the broken
It was
butterflies
there
that
for another
help?
day or two.
Yeah, I know, it's
Frank and I
funny.
kept looking at it. We're like, this is fascinating stuff.
Beautiful mind.
Yeah, exactly. So, Chris, today we got Amazon earnings after the bell.
Yep.
We had some data that came out this morning. Little inflation sticky data. Employment cost index was higher than expected. How much is the Amazon earnings going to move the market today? Is that a big mover for the indices?
I think it certainly can be. I mean, just like Google and Microsoft and Meta were last week, they can definitely play into it. I'm curious. So let me go to this today. This is what I'm really watching. I said this last week. I mean, either coming into the Fed week, we're going to see calm before the storm, where nothing happens, and so far that seems to be what's the case. Is Monday's trading was very quiet, little fake out here, finished back where it started. Today's opening bell range is pretty tight. I will be looking to see if we break today's low or break today's high for any type of directional play. But Nick, it wouldn't surprise me if we just stay very tight, very contained, and then it's just like open up the floodgates for Fed tomorrow. So
Yeah.
Amazon could possibly have its own individual move, but it's going to be I think it's going to be a pretty wild week on Amazon. Good, bad. I mean, I would not expect earnings on Amazon to be terrible. Um, let's see. The last time, I mean, let's just go through their daily chart because I feel like we've had mostly green. Hang on a second here.
Yeah. Yeah. A lot of really positive earnings numbers for
That's what I thought. If I
Amazon.
go, my charts are freezing on me for some reason. That was weird. Let's go daily chart here then. Daily chart, Amazon. There we go. Okay. So we just compress these. I mean, earnings positive, 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 negative,
Yep.
positive. Mostly, I mean, you're going to see the high majority of earnings be positive for Amazon. We're sitting here at all-time highs. Google last week cracked fresh all-time highs. I could see Amazon doing the same thing. I mean, a good print. If they certainly talk about AI, talk about web services, how their growth is, what it's Amazon. I mean, it's
Right.
logistically the best company in the world. I think that it has its hands in a lot of stuff that it wants, and it's going to make a bunch of money. A pullback is still totally fine, and I'm long-term Amazon anyway. So even if we have pullbacks, I do have cash secured puts on Amazon at the 150, 140, 130 areas. And I'm also long with some diagonal spreads, which mean I'm just taking calls and trading synthetics where I don't want to own the shares right now. But if I want to own them, I'm getting a sign at those put levels. So we'd have to drop to fill me at those prices. Otherwise, we crack all-time highs. Anything above $200 is pretty good for me. And we'll find out. I mean, I think Amazon is, what is it market cap wise? We're at 1.89 trillion. I want to
Yep.
say Amazon's like top 5. So you've got Apple, Google,
Sounds
Nvidia,
right. Yeah.
and probably Amazon's in there like top 4, top 5. It's certainly enough to move the market, but I just don't know. Let's go back to the SPY. IB today's 30. I mean, you're still pretty quiet. We should only see, it's going to be like maybe a $3 to $4 move on the SPY today from what I'm calculating. I did take this trade if you're interested, Nick.
Yeah.
So on the SPY today, I'm looking at the weekly candle. So far for the week, it's been a very quiet week, and we're already 2 days into trading. So what I just took on the SPY was I do this a lot for my earnings trades. Frank and I talk about this offline because this is such a quiet candle so far. I basically said, look, we're at 509, so I bought a 510 call and I bought a 508 put. And then I'm putting a spread on that. So I did a 498. This is buy 498 put, and this is a 520 call. So
Hmm.
these are both debit spreads. This is going to be a bull call spread, and this is a debit, not a credit, and this is a bear put spread. But what I'm looking for is if the market's going to deliver some volatility Wednesday, Thursday, Friday, I don't really care what it does, but as long as I can get like a $5 move out of the markets this week, one way or the other, that's enough for me to make some money on the trade. So
Sure.
I'm trying to get $10 profit here. It's roughly a 1-to-1. So if I let it hit my profit target, if it hits 520 or 498 or exceeds those levels, then I'm maxing my profit out at $10. But still, I'm going to take the chance on volatility being delivered this week and hopefully have some follow through post Fed tomorrow.
Yeah, it should be an interesting last couple day or couple days ahead with everything from the Fed tomorrow, and then jobs on Friday, Apple's after the bell on Thursday, Amazon today. So there's a bit of everything, or a bit of something for everyone here when it
Yep.
comes to market data to look out for. I still have a small short on the Russell. Chris,
Okay.
part of that thought process short term is that we've just seen a poke higher in the yields world. And I think that, I think there's a pretty good chance that we don't necessarily see an outright hawkish commentary on Wednesday,
Yeah.
but I think we might need to see, or I think there's a good chance we do see some more aggressive pausing from the Fed. I mean, we've just had so much data that's come out, and you can see it. I think you're pulling up the Fed Watch tool as we speak.
Yeah.
Yeah, like you can see it forming in the Fed Watch tool. The market is starting to say, "Hey, look, September is even questionable." There's just been consistent labor market strength. The consumer's not cracking and rolling over, and it's probably linked between those two things. People are employed; they're still spending money, and as long as that continues to be the case, what we're probably going to see the Fed kind of admit or say is that inflation is not all supply side; it is also demand side, and that it's going to be a problematic and tricky thing to get lower. So I love that environment, Chris, because what it tells me is that I love when there is a bear case in the stock market. And that's, I still think earnings will be great. I think technologies will continue to advance. I'm a bull in the stock market, but I love when there's a bear case present, because then the risk to reward becomes a lot more attractive.
Sure. And you're saying that as far as just waiting and buying and having the courage just to load up on these discounts?
Yes,
Yeah.
yes, but then also, specific to like a more short-term trade,
Hmm.
if we, get that sort of commentary from the Fed, and then, Apple smashes earnings and things look pretty good and there's a pop,
Right.
I'd actually buy that pop,
Right.
because
Right. Right. Yeah.
yes, you have concerns about, the Fed being adversarial, that sort of thing, but the risk reward just becomes more attractive when it's all obvious. That's where I like, trading the indices a little bit less.
Yeah, that's true. So one thing I noticed in our session yesterday, I mean, I don't remember if you and I both looked at the Fed Watch tool, or if I did it in my previous sessions, but
Mhm.
this has already been shifted quite a bit. So tomorrow's Fed, 96% chance nothing happens.
Yep.
Obviously, it's going to be about Powell's message and language. I think he's going to continue to do a great job of talking out of both sides of his mouth. And
Yeah.
what the market interprets that to be, I don't really know. Technically, you and I both kind of agree. I like the downside more so than the upside. I think the market has a much harder time retesting all-time highs than it does just like pushing this aggressively lower for the week. That's just my thoughts. But what I noticed already is June is super high probability that again nothing happens, and then July also getting kicked out there. But this is what was the big change for me. Yesterday this was about a 50-40
Oh, I
for
haven't
a
even seen
cut,
this. Yeah.
and September's already shifted into now a pause.
Very,
So
very
just from
interesting.
yesterday to today, before the Fed, we're already seeing that the market is like, you know what? They're not looking to do anything. And then you sit here and go another month out during the election. It's possible that they're going to maybe cut for the first time. It's like, of all months to put in a rate cut after pushing back, after having the expectation of 7 cuts this year and having literally 0 until the election, it's like it doesn't make a lot of sense. And I know this is still subject to change, and this number could shift. This histogram can get way up here for the cut. It could also go back to 0. Who knows, man? That's what's so frustrating about this. But
Yeah.
just to see
Well,
it
that's the
shift from
thing, Chris. The
September to
the
now, it's
trend has
crazy.
not been it's not been very nice. If you've been
Right.
somebody who's in the rate cut camp, the trend has been really, really frustrating because you've just
Yep.
seen this consistently get pushed back. And to me, it's kind of like you trade what you see. And the
Yeah.
trend for that is, I have a hard time getting just aggressively long equities. I also pointed out, I think right as you were joining, I put together a list of, a lot of growth stocks that I personally like. And these are like stocks that I really like, but I can't touch them. I can't touch them unless the market has a good old fashioned correction. If that
Sure.
happens, I'll load up on some shares, some companies, and buy the dip on the way down. You and I talked about this a couple, I don't know, weeks ago. Talked about one of the best ways to outperform is to get aggressive, to get, take risks when people are terrified.
Yep.
We don't see people terrified. I, to be honest, have made my best returns ever have been when buying, when people were just terrified to do so
Yep.
in names that I'd like to hold longer term. So I like that environment. I also can trade in up market too.
Yep.
But yeah, so just something to think about.
Yeah, and I mean, speaking of terrified, it's like if you bought the crazy dip in 2018 when the market crashed 20% at the end of the year, you bought the dip into that, Fed put in 2019, you got paid
Mhm.
handsomely.
Yep.
2020, obviously, if anything happened during a 1 month period with a 30 to 40% sell off and you bought into that, you got paid handsomely. 2022 was really the reality check, and I call this one the
Yep.
Great Reset, simply because there was nowhere to hide. Bonds were down, stocks were down, tech was down, value was down. Like there was no sector to hide. There's no bond. 60/40 portfolio was trash. Everything was tough in 2022.
Oh
But
yeah.
if you stuck with it, we still pivoted hard in Q4 and we had a broader market lift Q4 into Q1, Q1 to Q2. We had one pause in 2023. And for right now's environment, and again, I could be wrong. I was way more bullish going into this year, and it obviously was great for Q1. I was bearish going into April, thinking the market be a little bit more sideways, a little choppy, which it certainly is. We had a bigger sell off those couple of days on early April, and then I think it was last week Monday. So I could see this sell off that we had in 2023, that little summer sell off. I could see that kind of setting up here, where
Mhm.
we have a bit more of a correction. It just depends on how violent and volatile it is, or maybe how contained it is. The one thing we've got to give the market credit for is these sell offs outside of COVID in 2020. These market sell offs have been pretty contained, pretty
Yeah.
contained, pretty
Yep.
contained. So if we have another lower low over the next couple weeks here, Nick, I think a lower high to lower low would still fit some really nice structure to then see what's the market made of if it retests the all-time highs, retest this previous level of resistance, and then maybe rips back up to the highs for a 9 or 10% rally.
Yep.
I mean, I guess my case for the SPY being way up here going into the election, it's quickly dissolving. I think that right now, if we have the market making fresh lows, maybe the
Yep.
best thing we get in the summer is going to be sideways. And then it's going to be all about the election and what drama that stirs up in the next, 6 months. Who
And I
knows?
and I do think as you kind of approach the election, there will be uncertainties there, right? People just get, they don't know what's going to happen, and uncertainty the market usually hates. So
Yep.
we'll see, though. Election years typically are bullish, and so
Mhm.
that could be an interesting story to continue to watch. But one thing I also want to just add while we're on the topic of looking historically,
Mhm.
2022. One thing that a lot of people don't know, or may painfully know, is that if you were super long on growth names, this was the
Yes.
first time in a
Oh,
long
brutal.
time that you
Yep.
saw 70, 80% drawdowns, and many of
Yep.
them have not recovered those drawdowns. So there
Mag
is a kind
7
of
only. That's and take Tesla out, but Mag 7 only was the recovery. That was it. I
yes,
mean,
yep,
yeah, you've got
exactly,
way underperformance on. So I'm looking at Meta because Meta's crushed these levels at fresh all-time highs. And I know last week earnings weren't great, but from that 2021 to peak, 2021 peak to that 2022 correction, holy crap, man! I mean, this was
yeah.
insane. We had 70+%, right? Yes, 70,
There
almost
there's so many
77%
names.
peak to
Yeah, there were
trough,
so
and
many
it was
names
the
like,
whole market.
Carvana was a big one,
Yep.
Shopify. These are names that a lot of retail got so excited about.
Yep.
PayPal's another one of them, right? These
Yep.
are these are names that lost everything during
Yep.
2022. And this is the nature of the stock market that people, they don't always see when they look at the indices. The indices typically they remove the losers and they add the winners. It's really a genius strategy over time. But it doesn't always tell the full story of how a lot of investors get tied up in um, you know, stocks that go down forever or they never come back. And so it's something to think about. I do think I'm with you, Chris. I think that the idea of just a rip all year long
Mhm.
is being challenged here. I wouldn't be
Yep.
surprised if we do see a return back to this low, a retest of this low.
Yep.
But I've also mentioned several times that overall I am bullish, looking for opportunities to get long. And if the Fed comes out dovish, I will probably just be trading that higher, and keep a cash reserve for when a discount does actually set up. So it's my loose game plan on it.
Yeah. And are you hosting our trading battle tomorrow? You're
I
involved in
am.
that, yeah?
Yep.
Okay, so you're hosting tomorrow. It's going to be a morning battle, which will be interesting because we're taking this the day of FOMC. So we've got all morning to do the battle. We're still going to have to kind of trade and anticipate all these positions prior to the FOMC. So I'm thinking ahead that I might be hedging a lot. I might be willing to take a volatility expansion play. I might be looking to, take some currency trades and, buy inverse correlated pairs and just see if
Mm.
I can take a small loss, take a win, and net some profit for the week. But it's going to be tough because right now, I'm staring at my charts and we're quiet, man. I mean, everything from yesterday, there's the high yesterday, there's the low yesterday. Market has not broken yet. We're pretty much dead even, 35 and 36 on call and put volume sentiment today. The only gamma level that I see that's I'd say of substance would be like this 513 to 515. And you and I both know if you're looking at a SPY chart, that is near term resistance. So if we get there, I could see it being a test, but something tells me it's just going to be quiet. It's going to be quiet, all about the Fed. And so tomorrow's battle is going to be fun.
Yep. Yep. It's going to be a lot of fun. It'll be a big one. And of course, like you mentioned, it's going to be you, me, Gary. It's going to be a great time. And I think
Yep.
we're going to do the internally. We're working it out with them today on a call, but I think we're going to do Chandler and James are going to do the producing, the background, which will be fun. So we'll have all the,
Oh, nice.
yeah, we're going to in-house the whole thing, which is going to be
Okay.
fun to help them out. And then should be a good time. Chris,
Cool.
I'm gonna let you keep going, take over the stream here for a little bit. Frank might join you in a little bit.
Okay.
And in the meantime, let me just also say to everybody who's watching here live on YouTube, make sure to go check out Chris Pulver's YouTube channel. He's also got a Discord channel that you can join on that page. So highly, highly recommend it if you're not already in there or watching his YouTube channel. Great value there for you. So it's totally free, good stuff. And stick around for a little bit. Chris will show you some more cool stuff. And Chris, we'll see you back tomorrow, man.
All right. Thanks, Nick.
See ya.
All right. Bye. If Frank's going to jump in here, I think what I'll do is I'll get started on some earnings potential because that's really a big deal this week. We have Fed tomorrow. Today's the end of the month. Currency wise, so I did have a couple things that I thought were interesting. I always spot check, so I'll show you my Discord channel really quickly. And I always spot check in my blog on Fridays. I spot check how my robots are doing. They're doing pretty well. And this week, I actually didn't update this. This needs to be 867. Let me see if I can edit this. Let me edit this. This was an 867 from last week. And that was because I closed positions manually during my live session on Friday. But I took a look at, so these are all robots that I run in Forex. I have a Perfect Storm robot. This is range. Did a little improvement to manage drawdowns better. That's a range robot. Pockets Pattern Pro is a efficiency robot. It trades liquidity levels, supply and demand levels. And it just week to week, these robots do really, really well. I let these run full auto. Hypertrend is a full auto trend system that I'm really, really proud of. Kept captions profits last week. And then the six-figure ultimate is a wave-based, Fibonacci-based trend system that I just checked it this morning. It's already up 1,600 pips since I deployed it last week. So I'm saying that because there's a bias that comes into my lists. I'm only buying against the yen, and I'm kind of picking the other trades. I mean, I'm pretty much both directions on the dollar, and I'm letting my robots kind of take the losses on the chin. And just kind of trade the flow. If we have confirmed direction, let my robots get in there with good equity management. And I mean, robots a lot of times for me can help my forex trading and help my consistency. And what I do in the background is I trade massive patterns and I trade massive time frames, and I will sit in positions for months and months and months. And so I'm kind of a forex investor. So I'm saying that because my trading in forex is fairly passive. I invest in big levels in bigger time frames, and I'll sit and wait until it pays me. And this doesn't mean I'm sitting in drawdowns. This means that I am, building positions off of lows and off of highs. So as an example, really quickly in Forex, I have been in this trade for the most part of 2023 and 2024. Every low that we had tested here on this Euro Swiss, okay, every low that we have been testing, I have been buying. So when we had this test right here, I was establishing a long position on the Euro Swiss, and I was looking to see if we had a pattern and breakout. So when we pulled back, I started to buy. When we hit the lows again, I started to buy. When we had divergence down here, I started to buy. We had a trend line here, I started to buy. Broke out of this trend line, started to buy. I built into this position. All right. So now I have about 10 positions open on the Euro Swiss, and it's up, 1,000 pips. Collectively, right now in these Swiss pairs, I'm up over 7,000 pips in open positions with Swiss franc. I like doing that because it's my analysis on a bigger time frame. It's not very price sensitive, and these chunks of profit that I get are really, really nice. A lot of times, my year could look like this: from January to December. Okay, I might not make a lot of profit. My robots pick up some profit for me, which is really nice, and that's why I run them the way that I do. Is they'll keep trading and make me some profit every single week. But for the most part, my equity curve has like a big profit, and then it just kind of hangs out. Okay, and then a big profit, and then it hangs out. And so that's really what my year is. My trading for the Forex year is mostly 1 to 2 to 3 months of big profits, and then the rest is just steady or flat and boring. I don't know how many of you want to trade and look to trade to get excited, but that's not me. I'm a trader that wants to make money, and I will try to position myself where the highest probability is, invest in this area, let the price go my way. It takes some time. Sometimes it takes, weeks, sometimes it takes months, but when I get paid pretty well on those injections. So I'm saying that because right now, I'm just letting the Forex stuff work in the background, and I'm focused on earnings, which if we go into this week, I know Frank and I talked about this yesterday. There's a lot of earnings coming out today after market. We have the Fed tomorrow. All the ones in yellow are some that I'm interested in. I do have some exposure on PayPal. I'm in a trade with PayPal right now. I looked at Coca-Cola, McDonald's. I looked at Eli Lilly. I tried to price in a trade on Eli Lilly yesterday. It just didn't. It didn't hit the numbers that I wanted. I'm going to look at pricing in an SMCI, AMD, and an Amazon trade today. So I could start that process right now in this session. At 11 o'clock, I'm jumping into my trading room, and I'll continue to price this out with my traders in my room. And then we have Fed tomorrow. So for the most part, I want to see, there's two things that I need. If we have a high volatility expectation, great. If we also have consistent earnings reports, whether it's not that they have to beat expectations. I don't care if it goes up or down. Earnings is really a coin flip. Price can go up or down, and also sentiment plays into that. What I do care about is how often do these earnings moves hit the expected move? Because if they're high probability of hitting the expected move, then I can position that so if it hits the expected move, I get paid a good profit. And that's what I trade. So that's what I'm going to check on these three. And I think because we have FOMC tomorrow, I'm going to look at getting in position on these other ones as well. I did price out a Coinbase trade yesterday. I took the trade for $20.25. I closed the trade immediately for $20.15 because the last thing that I wanted to check was how often did it hit the expected move, and it was like 2 out of 10. So I like to see like a 7 out of 10, 8 out of 10 hit the expected move. Coinbase had big hits to the upside or big misses, but it only happened 2 out of 10 times in the last 10 earnings. So that is not consistent enough for me to say I'm going to take a Coinbase trade. But DraftKings, Block, or Apple, we'll see what the volatility looks like on those. Saphir says if it's months on end, the swaps will be huge. Right. But think about my dollar Swiss and my Aussie Swiss and my New Zealand Swiss and my pound Swiss, Saphir. What am I getting on those trades? Positive swap. That's also a reason I'm in those trades. Positive swap. So I'm in positions right now that I'm getting positive swap. So I've collected in one of my portfolios, I've collected over $4,000 in positive swap on Swiss pairs. So and you think about the difference. I mean, the Swiss is at 1.5%. The Aussies at 4.25, 4.5. The CAD's at 5. The Bank of England still above 5. The ECB is at 4.5. 4. Everything's above, right? So positive swap, everything would give me a little bottom line boost, and also the technicals line up. So my perfect storm, in a way, not counting my robot, that's the name perfect storm, but my ideal scenario in the Forex market is to get paid positive rollover to hold positions and also have the technicals aligned where I can have the pip appreciation as well as the positive swap. So it's freaking awesome. And that gives me a lot more confidence too, to take these positions, see that every single day I'm churning, 10, 20. Yeah, that's cool. I just made an extra couple $100 and I'm also up. I mean, I'm sitting on like 7,000 pips of profit. And some traders might be like, that's crazy. Take your profit. Nope. I'm still probably another 3,000 to 5,000 pips off of my first big targets on that basket trade. You know, Aussie Swiss still has more upside, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, all of them to me have more upside potential. So I'm going to ride them out and get to my big liquidity levels that I'm trading to. So anyway, like I said, it's passive to me. It's not price sensitive, but it's nice in this environment where we have positive swap for the first time in, I mean, almost a decade. I mean, 2024, 2023, 2024, that's the last time I remember really trading and focusing my strategies around positive rollover. It's been a long time. So, I mean, when it's a race to the bottom and everyone's at sub 1% interest rate, it's pretty negligible. But when you actually have, 0 to 5% out there, you can get some positive swap in the forex market, which seems pretty nice for the first time in a long time. All right. So, if you'd like to, I'm going to do some earnings plays right here. SMCI is one of them. It's already showing some movement for the week. The day is flat. The week is up a little bit. I want to see what earnings have given us so far. So SMCI is in the chip space, right? So Wall Street on edge ahead of the Fed decision. Spotlight falls on Amazon and AMD. We're going to see if that's kind of a, savior of the market this week and maybe stabilizes prices, or maybe it doesn't. I don't know. I think Amazon's report's going to be pretty solid. I would expect their earnings to be decent. To the extent that Amazon possibly breaks all-time highs. I mean, Amazon's expected to be about a $15 mover. And so earnings is today after market. We're trading at 180. If we get to 195, that breaches the all-time highs. We fall down to 165. We were down here with that low from Meta. So the drop last week in Meta pushed Amazon down to 166. We could test that level and maybe come into this, bigger pocket, which to me, if I look at this low to high, we pulled back 30%. I could see this retesting the high just based on that retracement. If we pull back any deeper, I'm still pretty interested in this breakout point being a buyer of Amazon and getting positioned to stay long. I am long-term on Amazon. I've got some cash secured puts. I'm long on calls right now, and I'm selling against those every 30 to 45 days to try to lower my cost basis. But I'm trying to get Amazon above $200 to take profit. Anyway, let's go to SMCI. We have AMD as well. So these two are coming out. So SMCI, I believe, is today after market. Yes, as well as AMD. So let's look at those. And then I'll also price in. Let me go option slam, price that in. Let's go free chat there. Okay, so SMCI earnings report. See what we have for expected moves. Okay, these are some big numbers. So SMCI 8.6, 7.7. Then we get into some double-digit earnings reports that are really consistent. 14.69, 18, 18, 20, 20, 21, 19, and 19. The average move, the expected move for SMCI is 19.41%. That's a lot. Let me see what that calculates into. If we go 19.41% times current price at 896.98, that's a $174 move. That's such a big move in an earnings play. There's no way that I'm going to do a reverse iron condor or debit spreads. That's going to be way too expensive. This is a trade that if the market does something with the expected move, I'm going to try to position for a high credit spread. So if I have to take a, let's say a $5 credit spread, I'm trying to make 350 or 375 or better. So I take small risk, high reward, and the price has to match these levels. So this is the expected move at 174. If I go a little bit more conservative, let's say that 19.41. Let's go 19.41. times 75%. Let's say we get to 75% of the earnings report and we don't quite hit the full move. That's still a 14 to 14.55%. So I'm going to calculate there 14.5% at the current price of 897.02. That's a $130 move. Okay. So I'm looking at a pretty reasonable move, $130 to $175. I'm writing that down. 130 to 175. Now I want to see on SMCI, can I place that trade on SMCI?
Hey Chris, how's it going?
What up, dude? How are you?
Pretty good.
Good, man.
You taking any trades today?
I'm looking at it. I'm looking at pricing in an earnings play on SMCI. The earnings have been pretty consistent, double digits, 14 to 19. The average is 19. So I'm going to look to see with $130 to $175 expected move. If I went out to the 10th on SMCI, I mean, earnings is today after market. We still have the Fed to deal with. Current price is, 890. It's 897. So between the 895 and 900, I would have to do something. Well, I'll show you how expensive it is. The market's anticipating right here $150 move, which is right in my wheelhouse of what I said. I said 130 to 175. if we get that $147 move, I could possibly position for an in-the-money credit spread. This would be, I'm going to go to like the 1030. So if I do a 1030 bull put spread, I can get 350 out of a $5 spread. That's not too bad. And that's also it's not super deep in the money. If I want to do like a 140, if we did, let's say 140, I get, there's no way that's going to fill. I mean, that spread's way too wide. I can get a $5 credit on a $5 spread. That's never going to happen. That is wild. Interesting. So let me see if I can get this more realistic. That's what I thought. So I don't know why this jumped so aggressively.
Does it tend to move on earnings pretty hard for SMCI?
Well, the average move based on earnings with the average is 19.41%. That's roughly $175. So that's a big mover. I mean,
Okay.
anything that I see earnings that's like 15 to 20%, those are big earnings reports. And for a stock that's almost $900, that's a heck of a move. To my point, I mean, if I did an at the money here, I just want to, this is going to be like a $150 credit or a debit. If I did an at the money, if I did a 900 by an 895, you're going to pay almost $15,000 to take this trade, to say, I'm going to take this trade. No way. Like, that's ridiculous. So you can see here, you're taking a, $15,000 trade. If you want it, no thanks. I'm not risking that much, and I'm not going to put that on the line for just an earnings report. So what I'll do instead is I'll keep my trade defined. This actually carries on with what Nick said earlier, which was, credit spreads and bull put spreads. If I went to my expected move, and I think I'm going to take this trade today, Frank. If I do my expected move, which is only a 75% of the earnings report, if we did 75%, we need to get to 1030. So if I do a bull put spread, a 1030 by 1025, right now the shows I get a credit of 390. That's pretty darn good. Now the spread is wide. I might not get filled there. I'm going to put in an order right now for 390 or 375, but I'm going to try to position these together to get filled on both of them. So if I do 895, we're at 893 right now. So 893 minus the 130, I need to be somewhere around that 763 level as well. So 763, I could do a 762. I could do this 765. This would be an in the money bear call spread. So I could get 740 for both of these together. I could get, oh, why is that so bad? That's way off, dude. Let me see what this looks like. So I could do a 770 by 775. I mean, I would take that. My risk would be $2.25. For this particular trade, if I'm doing the bid ask, let me see what I get on that trade. I feel like I'm making more credit on the delta. This is an 80 delta. That's way in the money on the call side. Okay, actually, I might be getting more premium on the. Yeah, I might be getting more premium on the call side. But if I can get filled at 785, that means my risk is $2.05, $2.15 right now. I'm happy to take that trade. I don't know why. See, it says max profit 290. That shouldn't be right. My max profit should actually be, all right, dude, this spread is super wide, man. Here's what I'm going to do. I'm going to take, it's a $5 spread. It's a $5 spread. It should be somewhere. If I can get 750 or better, I'm going to take the trade. So all I'm looking to do on this one, Frank, is if I take these trades, let me write this out so everyone can kind of follow along. Euro dollar, I see that for Hub. Euro dollar, look at the dollar index. I don't see the euro dollars ready to sell yet. You got to watch the dollar index for more bullishness. If the dollar index wants to sell, get stronger, then euro dollar is a good sell trade. But you got to watch the DXY. I wouldn't trade anything prior to FOMC this week. Okay, so let's go SMCI. Expected earning is around $130 to $170 move, $175 move. Let me go to the weekly. I think the weekly expected move as well. This would be daily, weekly here. Wow, the weekly average is 200. So I'm actually being pretty conservative on the earnings report. But I feel like that 200 is probably because of that one massive sell-off that we saw 2 weeks ago. That move all by itself was a $300 candle. Wow, that's a lot. So that probably threw off the ATR levels. But again, I'm just playing close to earnings. I think this is fine to calculate it.
It's a very expensive trade.
It is, but that's why I'm doing credit spreads, dude. Because if I take the credit spreads, it's not expensive at all. So if I did, at the money, Okay, what I'm going to do is I'm going to do in the money. So that's ITM is in the money.
Sell puts or something.
Yep. So I'm going to do an in the money bull put spread. And so current price is at $900, right? So I expect the move is current price. So I expect the move to go 130 bucks. So 1030 would be my in the money put spread. So I would sell the 1030 put, and then I would buy the next leg, which would be the 1025 put. That'd be my bull put side. And on the bear side, we're at 900, so we go down to 770. So I do 770 in the money call spread. And so I'll look at the sell the 770 call and then buy the 775 call. Right. And if I can get, $7 credit or 750 credit or better, I think this is a good trade. The reason why is if I win on one side and I make $7, and let's say I make $7 and I lose on one side and I lose the full $3 or I lose the full $2.50, whatever that risk looks like, right? The reality is if I grab, let's just say I'm losing, $3, right? That's going to be my risk. I still walk away with $4 net credit. Now, here's what I like about this. I don't need price to go way beyond these expected levels. I saw this in Meta. I saw this in Tesla. I saw this in Netflix. All I need price to do is test these areas very quickly through earnings. And if it does that, my $7 credit, my $7.50 credit, if I can collect that, we'll probably be trading for like a $6.50 debit or a $6 debit, and I can take the profit. So I'm not necessarily looking to get the full credit out of the trade. I'm looking to see, can I still hit like a 15 or 25% take profit? So what is, and right now I'm noticing that the spreads have settled down a little bit. The mid price is around 670. I don't like that trade. I'm going to try, here's what I'm going to do, Frank. I'm going to put in $7.50 credit on this trade. And I don't know if it's going to get filled or not. I truly don't. I'm going to go 2 contracts for $7.50. It's above the mid price. It's probably not going to get filled. This is good for the day because after market today and its earnings, I don't need to be in this trade trying to get filled. It's either going to fill me today or it's not. So if I get filled at 750, I'm going to put all these in as pending orders. And all I need is if price tests these levels with again, I'm being pretty conservative here too. If it tests like the $130 move, I'm okay. And I'm looking at the deltas here, like an 80 delta on the call side and a 70 delta on the put side. What's interesting is if I want to make these like deep in the money, I should probably go higher on the put side and make this a higher delta. But if I go higher, 902, I'm trading the $130 move right here. So the deltas on the call side, it's almost like it's not giving me enough credit on the call side, or the market's already skewing that this is going to be like a positive print and it's going to be going up. I'm not trying to take the trade based on that. I'm just trying to get a good fill with equidistant levels at $130 apart. So if I take the current price, go $130 up, $130 down, that's an equidistant trade. But the problem is based on option pricing, I'm not getting the same fill right now. So like I said, I'm going to put these together, try to get filled for 750, see if this takes. If it does, excellent. If it doesn't, it's good for the day. And I'm just going to make sure these are all good till day. Okay, because if not, it'll cancel and I won't take the trade. So put it in here. I'm only paying $500 in buying power. If I'm right, okay, I'm collecting $1,500 of credit because it's 750 times 2 contracts. My worst case scenario, if I risk the trade, my risk is going to be $500. I will take a $1,500 max profit for a $500 risk all day, every day. But the reality is, of my max profit at 750, I'm happy still making like $1 or $2, which I think is what my probability is. So anyway, let's.
But you're selling puts way above price.
Way above price, and also I'm selling calls way below price. And I want to explain. There's also another element to this. This does run the risk of assignment because these are deep in the money. So if my put spread and price goes lower, that put spread might be assigned, but that's why I have it as a spread. Because if I get assigned, I just close out the long side of the option. I take the risk, or I take the risk off by closing out the long side. I close out the shares that I'm assigned, and I wash it for a, if I took a 375 credit on that, I wash it for a $1.25 loss, while the other one is still working and hopefully making me some profit. So let me just see if I can place the trades and get filled on these. So this is good for the day, and hopefully this will fill. If it does, I'll fill in all the accounts. Dude, it filled easy peasy. I'm going to try to bump this up then. Similar. That filled really, really nicely. All right, 732. Let me see if I can get a bigger fill here. Let me go $8. If I could fill for $8, that's ridiculous, dude. $8, and let's go $8. 9732. Not filling at $8. Okay, let's try 775. Not filling. All right, so hopefully it just fills. 750 is fine. Give me something fair. It's filling at 750. All right, I'm going to take that trade in all these accounts. So 8051. Just give me 30 seconds to get through these accounts. Filling there. 911 here.
I also, okay, we talked about this the other week, but why take the risk of getting an assignment and with your bull put spreads when you could just do call? You could buy a call and sell a call at the same spot. You do 125 or 1025 buy call and then 1030 sell call.
Okay. So I'm filling in all those for 750. So your question is, why would I take the risk of the assignment? Because I'm not going to take the assignment. If the broker assigns me, I'm instantly closing out the trade. So this is what's going to happen if the trade assigns me. So the inconvenience of getting assigned is fine, but you have to remember the reason this is a spread is because even if I'm assigned, I still have the opposite trade running. So let's say hypothetically that this is the example. Okay, example
I know what you mean, but like if I took this trade and got assigned, I would get margin called. So it's like, is it worth the risk of doing something like that?
But a margin call, what are they going to do? Are they going to close out all of your positions that you have, everything in your entire portfolio?
They would just close the trade after like some deadline. They give you a deadline, but in the meantime, they restrict your margin, and then they count it as day trades, and then we only have so many day trades we can do.
Okay, well, so a couple things I don't have to worry about. I don't have to worry about the day trade or the pattern day trader rule because I have over 25K in the account, so that's not a problem on my end. The assignment is a sell strike. You still have the basically the hedge of that trade. So if my 1030 by 1025 bull put spread is let's say that's my trade, and then I'm assigned, which would be, so I'm assigned 200 shares long, 200 shares long at 1030. Well, let's just talk a number here. Let's say the SMCI drops to $700. If FMCI drops to $700, my 1030 is down $330 per share, which is ridiculous, and that sucks. But my 1025 long put is up $325 per share, per contract, really, right? So all I have to do with the assignment is the broker assigns it, and there's two things that a broker does. Either they assign you and then you still have the long option running, or they assign you and they exercise your long option and they wash it. Because my initial trade should be, if I collected $750 on this trade, my max risk is $2.50. So if I get assigned, I know that I'm still only risking, as the trade as a whole, I'm still only risking $2.50. So like I said, for me, I don't have the pattern day trading rule. If I get assigned, I could actually have the accounts like handle some of those for, I mean, if I take the assignment at 200 shares, it's going to tie up $18,000. I can take all those assignments, but I don't intend to own these shares. This is an options play. This is an earnings play. If I get assigned, I'm going to exercise the long option, get rid of the trade for the original risk, and let the other side hopefully be a winner. So I want to look at your trade, because this is how I'm going to take the trade in SMCI. It's a low risk, high reward trade that, to me, the probability is I don't need to wait until the 10th, and I don't need to wait for price to blow through these levels that I put the trade on. I just need price to do what is expected. Can the market on SMCI do a $130 to $170 move? If it can, I'm going to get paid on this trade. Now, one last thing that I wanted to look at would be post earnings. How many times did we hit that 14 to 15% move? So right here, let's see how many box we checked here. So we have this one at 3 days in, we have 17%. So that one checks the box. This one at 13 days is 16.49. That's too late. I'm not holding it that long. This one checks the box. This one checks the box. This one checks the box. This one, we get to 12. We get to 14. That's just shy. This one gets to 16. That one's fine. And this one gets to 31. Obviously, that's great. This one gets to a +5 to a -8. That's actually a 13% swing. Still not enough. And then this one gets to 25. So we have 7 yeses and we have 3 nos, which means that 7 out of 10 times this has hit the expected move of at least 14 to 15%. Now, the actual move is 19%, which is way beyond what I calculated. If it hits that, Frank, this trade is an easy win for me. And I can take that $750 credit and probably close it for a $550 debit or a $5 debit, walk away with a couple $100 profit.
Is it hitting this after, you said 13 days is the threshold?
I'm not going to, my trade is not out to 13 days. I'm taking the trade to the 10th. And so my days to expiration is 10 days out. So I'm looking at, I need this calculation to be within the 8-day window. So anytime, so these are all within 8 days. These have all hit the expected move within 8 days, which gives me the time to take the trade.
Okay.
Okay.
And
so
I did a setup on SMCI. It was more expensive, which I see why you don't do it.
Yeah.
So
what did you do, by the way? Did you go out to the 10th? What did you look at for a bull call?
I was looking at the 10th, and
okay.
Yeah, it was more costly. So
yeah,
it makes sense, but I mean, I guess not for a smaller account.
So I was going to say that might be the only thing holding your side back is the smaller account. And again, I don't want anybody to ever have to take a trade where it's like you're flagged with a day trading thing or it takes out margin, or that's obviously a pain in the butt to be kind of on the outs with your brokers. You don't want to do that. But also with trades like this, it's like assignments only happen about 7% of the time. So it's not that common. The assignment would be, this is the assignment risk. If I do, an in the money bull put spread and an in the money bear call spread, if price goes all the way up here, there is certainly a chance that this call side could get assigned, right? If it goes all the way down here, there's a chance that put side could get assigned. So I understand that it's not a risk-free trade, but like I showed you, because I have it as a spread, the assignment is just an assignment that I can still exercise the long option to still make it a defined risk trade. So it's not like this is defined risk and all of a sudden the assignment's like, oh crap, what did I do? I got assigned and I'm screwed. Never. You always have the other side of the trade, which is why it's defined in the first place.
It's not, your overall profit isn't going to change. It's just your margin is going to be gone.
Correct.
And that's the problem where if you get flagged too many times, they limit your margin, and then they count that as a day trade because you got assigned, and you don't want to close out of that because that's another trade. So it's they're very strict and
What's the solution? Get over 25K, dude.
Yeah.
I mean that also, it's like that's what you're working for, is like get that thing over 25K, and then this doesn't apply and you get a lot more permissions to trade. But you'll get there. And anyway, so that's SMCI. AMD, let's look at the same thing. It's kind of the same space. I did get burned on AMD the last time. So right in here, I did a volatility play on AMD and I ended up losing about 50% of that trade. I think I took it. I can look at my trade history here. Let me go to equities on demand and let me look at AMD, because I took a trade based on what should have been high probability, and price was chop suey, and I didn't get the trade that I wanted. So let me search for AMD. I did a reverse iron condor on AMD, paid $6.33, and I took the full loss. So I wanted to see if I could get it out to expiration, win an extra week, and it did not get me into profit. So I took a loss of $6.33. So as a lesson for that, I'm going to look at calculating the same type of thing, but instead of doing a reverse iron condor, I'm going to do just what I did on SMCI, which is do a credit spread. If I can walk away with,
did you look at
I'm going to do the same thing, dude. Amazon. So the same thing on Amazon. We're expecting, you and I calculated this out last week or yesterday offline, but I think that Amazon is a pretty good hit for like a $15 move. Here is Amazon right here. Let me go to Amazon. And let's make sure that we get the high probability of Amazon at least hitting the expected move. As long as we do that, Amazon's a good trade. It's not super expensive after the split. So, okay, so the average move on Amazon, and this is what I'm looking for, is it consistent? So we have 4%, that's low. We have 8, 11, 12, 14, 12, 9, 9, 8, and 8. So 8.36 to me is pretty solid. It's right in the wheelhouse. 8.36. I'm happy with that as a, it's not showing averages of 12 and 9, and all of a sudden it's like the mean is, 15%. 8.36 is very realistic. So let's do 8.36, and the stock is trading at $180. So $180.94 times an 8.36 average move. That's a $15.12 move. That's what I expect Amazon to do. Now, for a $15 move, there's two ways I can trade this and two ways I can trade this out. I'll go one more thing before we jump into the charts and jump into my broker platform. How many times out of the last 10 earnings have we hit 8+%? That's all I need to see. So we have 6 to 7 to 7 to 6 to 9, 8 days later. So as long as I go out to the 10th, I can hit that level there. That checks the box. This one, 5 days in, gets to 11%. This one, 9.42, day one gets there. Negative side, this one does not get there. 8.43, 8.43, 9.57, that one gets there. 11.76, that one gets there. 10.32, that one gets there. 10.19, that one gets there. 12, that one gets there. And then 4, this one does not. So we have 1, 2, 3, 4, 5, 6, 7, 8. 8 yeses and 2 nos. This doesn't mean it's a guarantee, right? This doesn't mean that Amazon is going to pay me this week. But based on the probability, this trade is pretty solid for the market to at least move Amazon the expected move. I think as a Mag 7, again, I'm speculating, of course, but as a Mag 7, just like we saw with Meta last week and Google and Microsoft, they all wanted to move. And so I think Amazon would be a good position to, one, put in some credit spreads if you want to be cost effective, put in a reverse iron condor, or what you like to do is just do those like really tight debit spreads and kind of have it be like a 1-to-1. I'm going to price it out. So the nice thing is it's exactly what I want to see. Amazon is today after market, and let's go Amazon. Then we'll do AMD. So let's go Amazon here. And if I go out to the 10th, which gives me 10 days out, we're currently trading at 180 to 182.50. That'd be the split. So if I did a 182, I'm not getting any. There we go. I'm like, I need to fill these prices in. Come on, Tasty. Okay, so I'm expecting to see a $15 move, right? And the market is saying that I'm going to have to pay $14.40 for a $15 move. Now, here's what's kind of nice about this. If we go to the expected move, which has happened 8 out of 10 times, if I did a 182.50, or if I want to space this out and say, look, from 177, I'll make it a little bit cheaper. Now I'm paying $13.22 for approximately $15 move. So from 182, if I sell that 197, okay, from 177, if I sell the 162, I'm only paying $9.43 to make a $15 move. Now, what I will probably do if we have some higher volatility, let's give Amazon some more upside. Let's see if Amazon can get to, that'd be a $17.50 move. Let's go to $22. Let's give me some more upside here if I'm going to take the trade. And then the downside, 177, let's go to 157. Now, this is a little bit more favorable as far as if we have a bigger move, I could pay $11.20. The market is expected to move $14 to $15. If I get that move, Frank, I can take this $11.23 debit and close it out for a $14 or $15 credit. That is enough for me to be happy walking away on the trade. If I wanted to let it, blow through expectations one way or the other, then I can close this out for potentially this is up $20, right? I could close this out for $22.50 on the call side, and I could close this for $20 on the downside, which paying $11, I make $9 here, and I would make plus $11 and change here. So I'm giving myself a pretty big profit window if I wanted to see price blow through the upside or downside. But realistically, if we just did the average move at $14.44 or my calculated move over $15, if we get a $15 move, I'm taking about $3 to $4 credit right there. I like the trade. So I'm going to take an Amazon trade this way, where I just look at Amazon as, let's say we have an expected move that's good or bad. I don't care. But if we get a $15 to $16 move, that's enough for me to take some profit. Now on this trade, I'm only going to take one contract, because if I lose, and I'm going to lose $1,100 here, I don't need to lose less than, this is about 0.5% on these accounts. So I want to lose less than 1%, and it's just an earnings play. But I like the trade, and 11.22 debit's not bad. So I'm going to go ahead and take the trade right now on Amazon, and then I'll price out credit spreads. So let me go here, price this out, see if I can get filled. Pending at 11.25. Let me move these around. So 11.22 debit's not filling. I'll try to get filled at 11.25. If that fills, I'll try to get all the accounts filled with the same price. Not filling at 11.25. Let's try 11.30.
You went as far as 150?
To the downside, 157. I'm going $20 apart.
So spreading them out gives it more room for profit to run, is what you're saying?
Yes. So if price, go ahead. So if you so sometimes the trades you've sent me, if you put in like the long put and then you cap it at $5, the value of that sell side changes so rapidly that you won't see the full profit until expiration. So what I'm doing is I'm going a little bit beyond the expected move to let my profit run before this trade is really threatened and before the value changes where it affects me.
Okay.
So I tend, so the move is $15. I'm going to go out $20, because that way, if it's beyond the expected move, I can capture more profit right up front. If it's not quite the expected move, I'm still letting price move. And if we hit that $14, $15 level, the real value of my long option is still going to be offering me that $14, $15 profit, and I can take it. I don't have to sit on this trade until the 10th.
Gotcha.
That makes sense? Okay. All right. So 11.25. Let me try 11.25. That's not filling either. So let me go 11.26. Filling at 11.26. All right. So I'm going to dance a little with the broker platform and get these all filled.
So you're going out to 205 on the call side, and then you're going to 170 or 157.50 on the sell side.
Can you see it right here? So I'll type this out for you.
Yeah, kind of.
Okay. So it's
177.5.
77. Okay. It's the 182. 182.50 by 205. That's a bull call. And then a 177.50 by 157.50 bear put. And I'm getting filled here for an 11.26 debit. And the expected move is $15, which, again, probability wise, I should have a pretty good chance of making $3 to $4 on the trade, but I'm giving myself a max profit of $20 on the put side, and I'm giving myself max profit of $22.50 on the call side in case there's a blowout. So that's the good thing. Now let me double check and see what accounts I have. So that one got filled. This one needs to be in. So let me take a similar trade here. And similar, 8051. Get this going here, 8051. Perfect, getting filled at 25. That's awesome. 911. Okay, similar. And also what's nice about this too, Frank, is if I wanted to sit on this through FOMC and through non-farm payroll, and even into next week, I think Amazon has enough in it and enough catalyst this week to drive that thing to the price that I want. So if I don't have an immediate reaction to profit, then I can still see a reasonable probability that I still get paid on this trade by next week. So that's, kind of a fallback plan in case it doesn't deliver, right away.
Okay. Well, cool.
And then lastly was 9072, and then this trade is done. So 9072.
The majority of those moves happened within the first 3 days, right?
Yeah, within 1 to 5 days, that's when most of these have triggered.
So I'm looking at your positions when they're out a week. Can they realize full profit? Say like a day or two after your trade. Like say it runs pretty heavily in your favor on like the first day.
Yep.
You
It'd
still
have to go way beyond. The only way I'm going to get close to full profit would be we'd have to go from 180 to probably like 215 or 220. And then I could realize that max profit right there because I'm just so far in the money on the long side that it actually, because I have still some time premium in that long side, if it happened right away, I could max that thing out if it was like blowing through my sell strikes. But for the most part, what I'll probably end up seeing is if we have a move that let's say it goes $20, if I get to 180 and this is trading up at $200, I'm realistically probably seeing this thing trade at like $14, $13, $14. And I'm going to take the profit.
You'd be happy.
Yeah, I'm going to take the profit. Yep. Because for me, if I get, let's say that, let's say I'm looking at the credit and it's trading. So let's go, I paid $11.26. Okay. So $11.26. If I take a 25% profit, I need this to trade at 281 over what I paid. So if I'm trading at anything over $14, I'm probably going to protect it because anything over $14 is a 25% take profit. That's a very safe, very high probability move for me in the earnings play. Obviously, I'd like to make more than that because I'm giving myself $20 to $22 of upside. But if I'm at 14 plus credit, I'll just take the profit and be done.
Gotcha.
So that's still, that's what is that? That's still over $200, right? If I did 11.26 times 25, I'm still making $2.81 a contract. So I make $281 a contract. So that's it. So that's Amazon. And then I know it's 11:05. We can probably run here, but I'm going to do one more thing. I'm going to jump right into my trading room and we're going to do the exact same methodology, exact same process with AMD though, because I got burned right here. I'm still willing to take the trade in AMD, but I think I'm going to do it more with credit spreads like I did on SMCI and take a very low risk trade and see if it looks pretty good. So I saw a bunch of questions in here like, look at gold, look at the dollar. Very quickly before we go, Frank, I know we have FOMC tomorrow. I would encourage everyone that's following along today as well to tune into the trading battle tomorrow. Nick will be hosting. Myself and a good friend of mine, Gary Fickart, will be the battlers, and it's going to be a wild day. We're going to have lots of stuff to trade, and I'm curious how aggressive. Gary's a aggressive trader by nature, so I'm curious what he does, and I've got an interesting plan that I'm looking to digest tomorrow and see how crazy active do I want to get. But dollar index, I think I'm looking for dollar strength, but the one thing that could happen on the dollar with the earnings this week is the earnings. Think about this. The Fed could be neutral. Earnings could be positive. Or we could have Fed neutral, earnings positive, and the market is going to be noisy, capped at the upside, capped at the downside, but a very, volatile week with no direction. If we have earnings positive, Fed is hawkish, that's going to be almost like a neutralizer, but it can be very volatile that way if we have opposing views. If somehow we have earnings positive, Fed dovish, I think this market rips hard. It still struggles at the highs, but we probably have a surprise move to the upside. And then if the Fed is, hawkish and the earnings come in lackluster, then we could have, another aggressive sell-off to put us at some fresh lows for the week. So I'm still not convinced that this market can go higher. I think we need a correction to the downside. So high, low, lower, high, lower, low. I'm still looking for that. The big play this week with how the market digests the FOMC is if we can break these lows, this is going to make, it's going to make it feel like the world is ending. But the reality is it's just a healthy correction. I'm still bullish on this market overall. And I mean, it's going to be disappointing to wipe away the gains for 2024, to be up 11% and wipe them all out. But at the same token, if we are sitting right back to flat, I still think there's a chance we could rally all the way back up to the highs and possibly go higher. It's just stuff has to look better, I suppose. And maybe it's going to be an interesting summer and certainly an interesting election year. So, but that doesn't matter because Frank, we're trading for today. We're trading for tomorrow. So that's what I'm here to do for right now.
True.
All right, dude. Yeah. Hey, you and I can take this convo offline. I'm going to jump into my trading room and continue with some earnings plays. And I'll see you tomorrow.
Sounds good. I'll talk to you then.
All right. Thanks, man. Thanks, everybody. Take care. Bye.
Bye.
Our Edgefinder anniversary sale is almost over. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.